bam! Fed's BFT consensus requirement. They're going to need XRP, XLM, XDC, and HBAR. We're going to explain it all to you. Imagine a future where sending money abroad is as quick and reliable as sending a text message. According to a recent Federal Reserve research paper, achieving this vision might depend on cryptocurrencies that use Byzantine fault tolerance consensus mechanisms, or BFT. In that paper, the Fed acknowledged BFT for its efficiency, security, and scalability in payment systems, a nod that highlights projects like Ripple's XRP, Stellar's XLM, Hedera Hashgraph's HBAR, and now XDC's network. Today we're going to break down what BFT consensus is in plain English for you, why the Fed cares about it, and how these four cryptos are uniquely positioned to transform cross-border payments and financial infrastructure. Let's dive into this baby. Byzantine fault tolerance, BFT, it's a fancy term for a system's ability to keep working, even if some parts of the network fail or act maliciously, badly, horribly. Think of it like a group decision-making process. Even if a few people lie or drop off a call, the honest majority can still agree on the truth. This concept comes from the classic Byzantine generals problem, a story where generals must coordinate an attack even though some might be traitors. A BFT consensus algorithm is like a voting system with built-in trust, ensuring the group network reaches the same decision or consensus despite a few bad actors or faulty connections. In practical terms, BFT means a blockchain or distributed ledger can process transactions correctly as long as participants, usually over 67%, are honest, providing high security and reliability. This is crucial for financial transactions that need to be fast and safe, because even if some servers fail or someone tries to cheat, hack, whatever, the system keeps chugging along without missing a beat. Imagine a family group chat trying to decide dinner plans. You got your cousin, your brother, your sister, everybody's on this chat annoying the piss out of each other. Even if one member has spotty Wi-Fi and another sends a confusing reply or a pissy reply, the rest of the family can still coordinate and order the right pizza place or set up the right pizza place, whatever. You know what I mean? Similarly, in a BFT system, the network still agrees on valid transactions, even if a few members misbehave or go offline. Why does BFT matter for payments? Why does the Fed care? Modern payment systems handle massive volumes of transactions, cannot afford downtime or errors, even in an adversarial environment where some components might fail or be under attack. Traditionally, banks rely on protected centralized systems or fault tolerance called crash fault tolerance that assume components will only fail by stopping, not by actively misbehaving. But as the Fed's research notes, BFT systems can tolerate a wide range of failures, including malicious attacks and data corruption, while still guaranteeing correctness. In other words, BFT is like an insurance policy against both hackers and technical glitches, ensuring the payment network never goes down and never produces wrong results, even under stress. The Fed's interest in BFT is also about security versus performance trade-offs. BFT networks traditionally had a reputation for being slower or harder to scale than non-BFT ones, showing that you can have both strong security and decent speed. The Fed's paper essentially validates that BFT is gold standard for secure payments, outperforming older consensus methods like proof of work or even basic proof of stake in critical ways. Wah, 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 wah. Sorry, Bitcoin and Ethereum. Unlike proof of work used by Bitcoin, which needs energy-intensive mining, or simple proof of stake, which trusts users just for holding the tokens? BFT uses mathematical agreement among nodes to confirm transactions. This means faster transactions with lower energy use and no single party controlling the process. For the Fed, which is concerned with financial stability, a BFT-based system offers confidence that payments won't be disrupted by a few failures or attacks. A key requirement of cryptocurrencies are to be integrated into mainstream payment rails. Fed's focus on BFT XRP, XLM, HBAR, XDC. Are these the chosen ones? When the Federal Reserve highlights a technology in the context of payment systems, it is a big deal. In its recent research, the Fed's recognition of BFT consensus was seen as a green light for certain digital assets that already use BFT models, the ones that we're talking about here today. This acknowledgement reinforces the relevance of projects like XRP, Stellar Lumens XLM, and HBAR Hedera Hashgraph, which each utilize their own flavor of BFT consensus. It's so tasty. These networks were essentially built with the exact resilience and security the Fed's looking for. And now we can add XDC running on the XinFin network to that list, as its recent upgrade has it using BFT consensus as well. Why these four? Let's break them down in simple terms one by one. Let's take Ripple XRP Ledger first. Consensus Federated Byzantine agreement is what they're using. A form of BFT, the XRP Ledger doesn't use mining at all. It's pre-mined. Instead, a group of trusted validators rapidly agree on which transactions are valid. This federated consensus is BFT at its core. It can tolerate some faulty or malicious validators without missing a beat. This results in high-speed, low-cost transactions that are secure on XRP Ledger, typically settling in just a few seconds, about 3 to 5 seconds. Ideal for cross-border payments, of course. May take days and has hefty fees associated with it, whereas XRP transactions can settle in 3 to 5 seconds for pennies. XRP's consensus model is precisely what makes it attractive or reliable global payments. All right, number 2, let's take Stellar XLM, Stellar Consensus Protocol, or SCP, which is a form of federated Byzantine agreement. In plain language, Stellar's network uses quorums, which are overlapping trusted sets of nodes, and these nodes have to agree, ensuring the system is BFT or Byzantine fault tolerant. This design prioritizes security and efficiency for financial transactions on Stellar. Now, like XRP, Stellar aims for fast settlement of payments. It was originally created to facilitate low-cost remittances and bank transfers. Its BFT-like consensus means even if some nodes fail, the network keeps going smoothly. Stellar's approach makes it a strong candidate for connecting banks, payment companies, and people, especially in regions needing inexpensive cross-border transactions. Now, Hedera Hashgraph HBAR consensus. Hashgraph gossip protocol with asynchronous BFT, ABFT. Hedera isn't a blockchain per se. It's a different data structure, or a DAG. It achieves consensus in a way that's mathematically proven to be secure, even with malicious nodes. It's pretty incredible. The gossip about gossip, that's what it's called, gossip about gossip, and virtual voting technique used by Hedera means the network quickly reaches agreement on transactions with finality without needing lots of energy or waiting like you do on Ethereum. EBFT algorithm is considered highly scalable and fast with bank-grade security, so much so that it's been described as offering the highest level of security for distributed networks while still maintaining efficiency. This makes HBAR well suited for everything from payments to supply chain and beyond. It doesn't hurt that Hedera's governance is handled by known organizations like Google, IBM, and others, which can reassure regulators. Now, let's take XDC with its recent 2.0 upgrade not long ago. XDC running on the XinFin network. Its consensus is XinFin Delegated Proof of Stake 2.0, now upgraded with Byzantine fault tolerance. XDC started as a hybrid blockchain aimed at enterprise and trade finance using a delegated proof of stake model. But in late 2024, XDC rolled out XDPOS 2.0, a major upgrade introducing what? A BFT consensus protocol. Specifically, the chain was called HotStuff algorithm. This means XDC's network gained military-grade security and finality as long as less than 1/3 of validators are malicious. In simple terms, XDC 2.0 now has the same BFT resilience that the Fed is looking for, making transactions extremely secure and instantly final within seconds. This upgrade puts XDC in the same league as the above three in terms of consensus robustness. It's now a strong contender for secure payments and finance applications, combining fast proof-of-stake style operation with BFT level safety. All four networks share a common thread. They achieve consensus without mining, using algorithms that tolerate node failures or attacks, and this makes them energy efficient, fast, and reliable, characteristics that align well with big institutions like central banks who require for payment systems, they require this. It's worth noting that XRP, XLM, and HBAR are already compliant with ISO 20022 standards for financial messages. That goes into play November 2025 this year. No, they're not going to delay it. ISO 20022 is the new global messaging format for payments that banks around the world are adopting. This uses rich messaging data. This technical compliance means that crypto networks can speak the same language as traditional finance systems, smoothing the path for integration into banking infrastructure. In short, the Fed's BFT-friendly stance is a huge validation for these projects, as they've been essentially building networks that meet or exceed the Fed's security requirements for payment platforms. Real-world implications: faster, safer, cross-border payments. Now, what could this mean for everyday people and the global economy? Faster and cheaper cross-border payments are one big promise. Today, sending money abroad through the traditional banks can be slow and costly, and often taking days with multiple intermediaries piling on fees. In contrast, a BFT-based crypto network can settle payments in seconds at a fraction of the cost. For example, the XRP Ledger's consensus, it allows USD to go to XRP to go over to Euro, and transfers to finalize in 3 to 5 seconds with negligible fees. Stellar similarly has been used in remittance pilots to move currencies across borders in near real time. This speed and efficiency can be life-changing. Think of a migrant worker sending money home instantly, or a business settling an international invoice on the same day. It removes the bottlenecks of the old SWIFT system. No more waiting until Monday for a wire transfer sent on Friday, and you could have saved billions in fees globally. Reliability and security are the other game changers here. With BFT consensus, no single server that, if hacked or down, could halt the network. This is crucial for critical infrastructure. If one node in, say, the Ripple or Hedera network goes rogue or breaks, the others simply ignore it and continue validating honest transactions. That means 24/7 uptime, even under cyber attacks. Okay. For banks and central banks, this resilience is non-negotiable. A payments network that can't be easily disrupted or manipulated is as important as vault doors to a bank. The Fed's endorsement of BFT suggests that future payment rails, possibly even central bank digital currencies or Fed-controlled networks, might use similar distributed BFT architectures to ensure trustworthiness. Beyond just remittances, consider financial markets and trade. XTC Network, for instance, focuses on trade finance. With its new BFT consensus, documents or payments in trade transactions can be processed swiftly and with finality, reducing fraud risks. Hedera's ABFT could support things like real-time gross settlement systems or stock exchanges, where any downtime or inconsistency could cause chaos. By using BFT crypto networks as the backbone or bridge, institutions can achieve near-instant settlement, no waiting T+2 days for stock trades to clear, with confidence that the record is tamper-proof as well. Finally, integration into existing systems is becoming much easier now. The fact that XRP, XLM, and HBAR and XDC speak to ISO 20022 means banks can plug into these networks without reinventing the wheel. We're already seeing partnerships, banks, and fintechs testing these networks for cross-border transfers, liquidity management, and even central bank digital currency pilots. For example, Ripple has worked with banks on using XRP for liquidity and cross-border payments, and Stellar has partnered on cross-border payment corridors. They're working with MoneyGram. They've been doing that for a while now. On cross-border payment corridors, such as with MoneyGram, as regulators like the Fed show a preference for BFT-backed systems, it likely encourages more adoption of these networks by big players, potentially making networks like XRP, XLM, XDC, and HBAR part of the core global financial plumbing. In summary, Byzantine fault tolerance, or BFT, is becoming a buzzword in the quest for an unbreakable next-generation payment system. The Federal Reserve's focus on BFT consensus is a strong signal that security and reliability are top priorities for any crypto aiming to play in the big leagues here in the world of finance. XRP, XLM, HBAR, and XDC have emerged as leaders in this space, having built their networks on BFT principles from the start. In XDC's case, yes, we had an upgrade to find. For beginners and veterans alike, I would like you to take this away. A crypto's consensus mechanism does truly matter. It's not just about speed and hype, okay? It's about trust, and BFT is all about creating trust in trustless networks, which is what we're dealing with. So as we move forward toward a world of instant borderless payments, don't be surprised if the tech under the hood of your future banking app is influenced by what these BFT cryptos have pioneered. And I'm talking about here today. They're fast, they're secure, and now they've got the Fed's attention. The age of BFT consensus crypto for payments might just be beginning now, and that could mean a more efficient financial world for all of us. Thanks for tuning in to the channel. Please don't forget to tap our link below for Caleb and Brown, your one-stop concierge service for crypto brokerage. And please tap that like and subscribe. We thank you so much for tuning in. We love you all. Thanks for tuning into Crypto Info, Blockchain Made Easy with your host, Frank the Crypto Tank. We'll catch you next time. See you guys. Smoothing the path. Smoothing the path. Smoothing the path. I don't know why I fucking said that 3 times.